Okay, hello and welcome to the SNAP Quarterly Engagement, one of three, where we will be talking about SNAP eligibility basics. So if you're new to SNAP or don't understand the eligibility parts of this program, this is the training for you. Before we get into the core eligibility factors for SNAP, let's talk about why SNAP is vital. For every one meal the food bank can provide, SNAP provides nine. For every $1 of SNAP benefits spent at the grocery store in the local economy, $1.50 to $1.70 is invested back into the local economy. So there are some local community economic benefits to SNAP recipients spending their money in local grocery stores. Earned income or employment is the second most common income source upon SNAP recipients. So there is this misconception that people who receive SNAP are not working, but the numbers and the data tell us otherwise. And in fiscal year 2023, an average of 42 million people received SNAP benefits. And in Tennessee in 2023, over 71% of Tennesseans were in families, Tennesseans participating in SNAP were in families with children. Over 35% were in families with members who are older adults or seniors. And then more than 37% are also in working families. So that's just a little bit of those local statistics to just our state. And if you didn't know, SNAP stands for the Supplemental Nutrition Assistance Program, formerly known as food stamps. So it is the same program, just called SNAP now. And it is the largest nutrition assistance program in the country. So let's jump into who can be eligible for SNAP and what does that look like. So really there are a few things, like 3 to 4 things that Department of Human Services, which is the state agency here in Tennessee that manages and administers SNAP benefits, they're going to look at a few things to determine if a household or individual is eligible. And the first thing is your household composition. So for the purpose of SNAP, household composition is everyone who lives together and purchases and prepares meals together. So if you are in a roommate situation where you're buying and preparing your meals, excuse me, separately, you would want to apply separately. So if both roommates wanted to apply, then they would each fill out their own application. Now, in that same scenario, maybe you have two roommates that do buy and prepare their meals together. And in that case, both of those roommates are going to complete one application together. So it can become a little bit difficult when there are household members who maybe don't want to apply for SNAP, but someone in the household does want to. If they're buying and preparing meals together, they must go on the application together. So that's important to figure out. If you are helping someone apply for SNAP, that is usually the first question you'll want to ask is how many people live in your household? And then of those people, do you buy and prepare your meals together with them or separately from them? And why that matters is gross income. So we'll look at an income chart shortly, but the gross and net income are pretty much the main factors that will determine if you are eligible for SNAP. So you'll want to know how many people are in the household first because the income guidelines are going to be different based on the number of people in your household. But gross income is looked at. So household gross income is any household income that's before any taxes or any deductions are taken out. This includes earned income, unearned income, SSI, disability benefits, TANF, cash assistance, Families First, retirement, workers' comp, unemployment, short-term disability. So really any income that is coming into the household is considered. So it doesn't just have to be income from a job. It can be these other kinds of income as well, and child support. So a lot of people don't view child support as income. So just think of it as money coming into the household from a variety of different sources. Those things are going to determine if you're eligible, or those amounts, I guess, are going to be used to determine your eligibility for this program. In addition to them looking at your gross income, they're going to want to know the household's net income. So your net income is your household income after allowable deductions and expenses. And for the purpose of SNAP, allowable deductions and expenses are only a certain number of things. It's not everything that a household could incur as an expense. When you do your taxes, you notice that sometimes they'll look at certain deductions but not others. So it's kind of the same thing for SNAP. So we'll look at what are those eligible deductions that they count or look at. Your resources are also considered. So, resources that they look at are going to be liquid assets. Liquid assets are things like cash on hand, bank accounts. So, if you have a checking or a savings bank account, lump sum cash benefits or cash payments, like from the gambling or lottery winnings. And then any bank accounts of any kind, whether it's a retirement account that you're drawing from, or a trust fund account that you're drawing from, they're going to look at that as well. And then also your citizenship status determines eligibility for SNAP. So in addition to your income and resources, you have to meet certain citizenship requirements. And we're going to talk about that on the next slide. So as of July 4th, 2025, some immigrant eligibility criteria changed. So all the information on this slide is current as of July 2025. So immigrants who may qualify for SNAP. Not all immigrants will be eligible, but if you're a United States citizen, you will likely be eligible. If you're a naturalized citizen, a United States national, or a child under the age of 18 who maybe was born here in the United States, but their parents were not, and their parents are not themselves eligible. If the child is in the household and resides with those adults, and the child was born here and is a U.S. citizen, then those parents can apply on behalf of that child. That can get a little confusing. So whenever we are looking at an application, there's a place on there where you can list all household members. And then there's a question next to each household member's name asking if that person is applying for benefits or not. So, a good rule of thumb to keep in mind is if you're working with immigrant households where the parents may not be eligible, but the children are because the children were born here, you will still need to list everyone on the application. But that question that asks, is this person applying for benefits? Yes or no? You're going to write no next to the parents of the household. So if you're not eligible for SNAP, you're not applying for SNAP. But in certain circumstances, you will still have to include yourself on the application. So that's where that's a situation like an immigrant, mixed immigration status household would be using those yes, no questions on that application. We're not going to look at an application or really go into the nitty-gritty of immigrant eligibility. If you're interested in that, there is a second training, the special categories in SNAP training, and then the how to apply for SNAP training. So those go into more depth about how you actually put that on the application. And moving along, some American Indians, Hmong or Highland, Laotian, Haitian, Cuban, Iraqis, and Afghanis, some of those populations may be eligible for SNAP depending on their status. So, really, not a whole lot of immigrants are eligible for SNAP. The most common I tend to see is when parents themselves are not US citizens, but their children are. So, that's kind of the most common scenario we see when doing SNAP applications. It's important to note that in the example of where you have parents in the household that are not eligible for SNAP, but their children under 18 are, they still have to meet the income and resource qualifications. So everything we just went over on this side, like the resources, the net and gross income limits, all household members must still meet that criteria. So if parents want to apply for just their children that are eligible, those parents' income and resources still cannot exceed the asset and income limits, which we'll look at here shortly. So it's important to note that they still must meet those standard eligibility criteria. And then in addition to that, with that same example, if they're, for this example, let's say it's two parents and two children, the parents are not eligible, but the children are. All four of them will go on the application. But when it comes to if they are approved by Department of Human Services, by DHS, if they are approved, DHS is only going to determine the benefit amount of the eligible household members. So in this case, it would be the two children and not the parents. So even though it's a household of four, only two people are eligible, which are the kids, and therefore only the benefit amount will be based on those two kids. So for a household of two. And this will make a little more sense once we look at the income chart. Before we do all that, let's also talk about another special category. So college student eligibility. And again, if you want to go into more detail with immigrant, college student eligibility, I do cover that in part 2 of the learning series, which is the special categories in SNAP. But college students are considered any student that's enrolled at least half-time in an institution of higher education. So those can be community colleges, state universities, tech schools, and half-time is really considered half-time is based on what the organization or the institution considers half-time. Most of the time, I think it's 6 credit hours is considered half-time, but again, that is going to be dependent on the individual institution or school. So if you're a student enrolled at least half-time, you can be eligible for SNAP if you meet the general eligibility criteria like the income and asset resource limits. But you also must meet one of an additional criteria. So you must either be under the age of 18 or age 50 or older. And what I mean by this on this slide is students are subject to work requirements. So they can still be eligible for SNAP if they meet income and resource criteria. And if they do meet that, they have to be working 20 hours a week or more in addition to their school studies. So I know that's a little bit confusing, but if they're a student that cannot satisfy that work requirement, then that has to mean they meet one of these exemptions. So if they're under 18 or age 50 or older and they're a student, then they are not subject to the work requirement. Physically or mentally unfit, which it basically is a Department of Human Services definition, but basically that means you're disabled. If you're working 20 hours a week or more and you're a student, then you're good. If you participate in a federal work study, receive TANF, participate in SNAP E&T, or if you have a child that you're responsible for and that child is under the age of 6, or you have a child between the ages of 6 and 11, but don't have access to adequate childcare, or if you're a single parent enrolled full-time in school and taking care of a child under 12. So that is a lot of different things there, but basically students are subject to extra special work requirements in addition to going to school. So that's what that means. And if they cannot satisfy those work requirements, they have to meet one of these exemptions for that to happen. Students who live in dorms or live on campus and receive more than half of their meals from a meal plan are not going to be eligible for SNAP. And let's say students are out of state students. So I'm a student from Florida, let's say, but I'm going to college in Tennessee. They have to, if they want to apply for SNAP, they would need to apply in the state that they reside. So not the state that they're from, even if they're only in that state because they're going to school. They need to apply in the state that they live or reside in. Okay, so now that we've touched on a few eligibility for a few special categories like immigrants and students, let's talk about resource limits. So I mentioned earlier that resources include checking and savings account, cash on hand, CD, stocks, bond, lump sum payments, retirement accounts, money in Cash App or Venmo accounts. And those limits for those assets cannot exceed these amounts listed here. So if you are or have someone in your household who is a senior, so 60 years or older, or disabled, then your assets cannot exceed $4,500. So that means money in your bank accounts, any of these kinds of resources cannot exceed $4,500. So even if you meet the income qualifications, but you have $10,000 in savings, you're not going to be eligible for SNAP. You have to meet both the resource and income limits. And we're going to get to income in a second because that's the most important part. But all other households, so if you're not a senior or you don't have someone who's a senior or disabled in your household, then you must meet this limit. So your resources cannot exceed $3,000. So basically, seniors and folks with disabilities have a little bit of a higher asset limit than all other households. So let's move on to the income piece. What's considered income? I think I talked about this earlier, but countable income includes money from a job, gig work or self-employment, alimony, money from another person. So sometimes if someone's in a bad situation, they might have a friend or family member helping them out and sending them money on a regular or irregular basis. That is considered income, and that will be looked at when determining eligibility for SNAP. If you receive disability benefits, or SSDI as it's abbreviated, SSI, which is a form of income from the Social Security Administration. If you get Social Security, which is usually retirement, that's also considered income. If you're drawing unemployment, workers' comp, receiving child support, medical leave payments like FMLA from an employer, like if you're having a baby and you're getting FMLA payments, that's considered income. If you're receiving pension, stipends from any kind of programs, I know a common one is the relative caregiver program where grandparents might be taking care of their grandchildren and receiving stipends through different programs that they participate in, that's considered income. And then if you're drawing survivor benefits or interest income, those are also considered um, income for the purpose of SNAP. And then looking at what those actual income limits are. So this is the current income chart. Income limits and guidelines change annually. Those are determined by the United States Department of Agriculture, USDA. And so they change the guidelines for different programs, the income guidelines for different programs, usually every year. And for SNAP, it's October 1st of every year. So these are updated as of October 1st, 2025, and they won't change again until October 1st, 2026. So let's look at this chart. If we have a family of four, let's say no one in the household's over the age of 60 or disabled, it's two parents and two kids. Their gross income must be at or below $3,483, and their net income must also fall below $2,680. So they have to pass both the gross and net income limits. So that's important to note that even if they pass the gross income test, they also have to pass the net income test. And you're probably asking, well, how do we determine what a household's net income is? Well, you're going to look at certain deductions and expenses, only those that are counted for SNAP. And I have that listed on the next slide, in which we'll go over. If you are a senior, so 60 plus, or disabled, or your household contains a senior or disabled person, then you're only subject to the net income limits. So let's use the example most commonly that I see is a single 65-year-old person who's drawing their retirement or their Social Security check. They have to have their check needs to be less than $1,305. If it's above that, let's say they tell you their check is $1,500, don't automatically assume they might be ineligible. Figure out what their deductions are, right? Because they are subject to the net income limits. So for them, when you're working with seniors and folks with disabilities, you're going to have to look really closely at what their deductions and expenses are and determine if their net income falls below these amounts listed for their household size. The far right-hand column on this chart is the maximum SNAP allotments. This means these are the max benefit amounts a household could receive if they're approved for SNAP and have an EBT card. So these benefit allotments or amounts would be the money they get on their EBT card each month if they qualify for the max. So not all households will get the max benefit amount. It will just determine what their income and deductions and expenses are. And the Department of Human Services is the only organization that can determine benefit amounts. So if you have someone who's asking you to help them with an application and they really want to know how much they might be eligible for, you can certainly tell them what they might maximum be eligible for, but also let them know it's really going to be dependent on their expenses, deductions, and how DHS calculates all of that. And then reminding them that DHS will determine that amount for them. So basically what that means is a household of one could receive the full maximum benefit amount of 298, but they may not. They may only get $100 or $50 a month. It really just depends on what their income is versus what those expenses and deductions are. So let's move on to deductions and expenses. Those are a few slides here because there's a few that are considered. And you don't have to remember everything on these next couple of slides. There are some great online calculators that you can use to plug in a household's income and their household deductions and expenses, and it will calculate for you what their net income is. So if you know somebody's gross monthly, you can type that in, and then they start telling you their expenses and how much those are. You type those in, and it will do the math to get down to the net. So those tools, I think I have linked in one of the upcoming slides, and they're really great to use if you're kind of in a time crunch and you just want to help someone see if they might be eligible for SNAP to begin with before they really start doing an application. So, what are the expenses and deductions that Department of Human Services counts or looks at? So, those are standard deduction. Everybody gets a standard deduction regardless of your situation. And those are determined by your household size. So, if you're a household of 1 to 3 people, you get a 209 automatic deduction. And then it just goes up from there based on your household size. If you receive earned income or basically money from either employment or self-employment, you can get an automatic 20% earned income deduction. So what that means is when we're looking at net income, we have to first know the gross, and then we subtract all of these expenses or we do all this calculation, right, to get down to the net. So they take 20% of your gross, 20% deduction from your gross income. So standard utility allowance is used in calculating a shelter cost of households who directly incur heating and cooling costs regularly and separately from their rent or mortgage. So people can take the standard utility allowance listed here for their household size, or they can claim their actual utility expenses. The only time I would recommend claiming actual utility expenses is if it's over these amounts. So if you have a household of one, they will get the standard utility allowance of $451 if they mark on their application that they pay their heating and cooling costs separately from their rent and mortgage. If it's somebody who has a rent amount that has the utilities rolled into it, they do not get the standard utility allowance. So these are only given to households that have basically a separate bill for their heating or cooling. More deductions that they look at are dependent care costs, and there's no cap on that. So if you say, you spend $1,000 a month on childcare, then you can deduct that from your income. And I probably should have said this in the beginning, but all of these deductions that you're claiming or these expenses that you're claiming you have, they're going to have to be verified. That means Department of Human Services is going to ask for proof of. So if you're saying you spend $1,000 a month in dependent care costs and they're wanting to take that deduction from your income, they're going to be asking for you to provide a letter from the care provider that says, they do provide, dependent care to your children, and then they charge you this amount per month. So basically, everything's going to have to be verified. That goes for, the shelter, the utilities that I said here. If they want to claim their utility expense, they're going to have to show like a bill, a recent bill. You can get a child support deduction. So if you pay child support for a child that lives maybe outside your home, then you can claim that as a deduction. So if you say you pay $600 a month in child support payments, you can get that deduction as long as you prove it. Basically, if it's through a court system, they'll probably have access to that. DHS can pull different records, but you'll likely need to provide some kind of verification for all of these. The homeless shelter deduction, this is if you are unhoused, but you still incur shelter costs. So an example of this could be someone who is truly unhoused, but maybe they stay with friends or family members occasionally. Maybe they sleep on their couch a few nights a week. If you are in a situation like that and you are paying somebody to stay there, you can get the homeless shelter deduction, and that is just a standard $198. Some people will qualify for the excess shelter deduction. Not everyone will, but you can get the excess shelter deduction if your shelter expenses exceed over 50% of your household's income after all your other deductions. And that's a maximum up to 744. So unless you're elderly or disabled, then there's no cap. The excess shelter deduction includes rent, mortgage, property taxes, the standard utility allowance, and phone utility. So let's say that your rent, your utilities end up being 50% higher or more than what your actual income coming into your household is. That is when you can claim the excess shelter deduction. And the calculation for that is really confusing. I'm not going to dive into that here. If you want to look at and see how that's all calculated, I would recommend using one of those online calculators that I mentioned earlier, which I should have linked in one of the next couple of slides. Utility, telephone. So if you pay for a cell phone or maybe still a house phone, you can subtract $36 from your income. It's just a standard telephone utility allowance. And then most importantly is the medical expense deductions. Not everyone knows about this, but only seniors or disabled household members can claim the medical expense deduction. So if you're 40 years old and you're not disabled and you have medical expenses, maybe you take a medication, you can't claim the medical deduction. Only if you're 60 years or older or have a verifiable disability can you claim medical expenses. And they will only deduct the amount over $35. So if I pay, let's say I am a 65-year-old senior and my prescriptions come out to $40 a month. So they're only going to deduct $5 because they're only deducting the amount over $35. So in the example that I just spoke of, if I have $40 a month in medical prescription costs, I can take 40 minus 35, which leaves me with 5. So that's the actual amount that's going to get deducted is the $5. For someone who has, $200 in medical expenses, you would take 200 minus 35, that's 165. So $165 is the deduction I can get. So it's super important to make sure seniors and folks with disabilities know they can claim this medical expense. Because I guarantee you, if they start really adding it up, prescriptions, doctor bills, co-pays, maybe they pay for transportation to go to and from a doctor. Um, if they're paying on a bill, maybe they had a $10,000 medical bill, but they're on a payment plan and they're paying $200 a month towards that bill, then that is definitely considered a medical expense and they would want to make sure they get that deduction. So as with everything I've already mentioned being deductions and expenses, those medical expense deductions are no different. This person who's wanting to claim these are going to have to provide verification that they have this expense. So if it's the example of prescriptions, they can go to the pharmacy and ask for a printout to show the quarterly or monthly cost of how much those prescriptions come out to be. Okay, so let's move on to expedited SNAP benefits. These benefits can be made available within 7 days from applying. So it's the same thing as you may have heard of emergency SNAP before. It's not necessarily emergency in the case of like a natural disaster happening, but it's if you are destitute. So what that means is if you are an individual or a household that has less than $150 in gross income in the last 30 days and less than $100 in uh, resources, then you can potentially qualify to get your SNAP benefits quicker than the normal process. So only a few people will qualify for this. And what this means is you'll still go through the application process as normal. But if you fill out the application and it triggers in their system that you qualify for expedited SNAP benefits, you are supposed to be getting those benefits in hand within 7 days from applying. So if you say you have $100 or less in assets and $150 or less in income, then you might qualify for these. It's very recommended for individuals that qualify for expedited SNAP benefits that they apply online. If you apply online, it's going to speed the process up versus if you are filling out everything on paper and mailing it to DHS. They may not even get your application in 7 days if you're mailing it. So it's recommended that if you're in a situation like this, you apply online or receive help from an application assister, such as Second Harvest Food Bank's team. We can help people get that application in pretty quickly. All right, now that we know the core eligibility factors that play into if you're eligible for SNAP or not, let's look at a few examples. So a few real life examples. So here we have John and Larry. John and Larry are brothers who live together, and they prepare their meals together. They are both seniors over the age of 60, and John receives Social Security benefits of $1,000 a month, and Larry receives only a pension of $200 a month. They do have a mortgage. It's $500 a month, and they both pay out-of-pocket medical expenses. Between the two of them, it comes out to being $335 a month. They do pay for their utilities separately from their rent, or sorry, separately from their mortgage. And in total, their utilities run about $100 a month. So let's say John and Larry come to you and they're looking for your help to see if they're eligible for SNAP. They want to know if it's worth applying for them or not, because they don't want to apply if they're not going to be eligible. While we cannot tell them if they are going to be eligible, right? That's up to DHS. We can help them determine if they are likely or likely not eligible and then help them decide what they want to do. So this next slide here is a lot, but it breaks down their deductions. So since they are seniors, if you remember me saying earlier, seniors are subject to the net income limit. So we need to determine what John and Larry's net income is. They only know their gross, right? They only know what they make each month and then they're paying bills, right? They may know what they're left over with, but we really need to look at that to determine if they're going to be eligible or not. So going back here, John receives 1,000, Larry receives 200. So total, that's $1,200 a month in gross income. Now I'm going to flip back a few slides to the income chart, and I'm going to go down to a household of two because John and Larry are applying together since they live together and prepare meals together. So household of two, where they're both seniors, they're subject to net income only, is 1,763. Their income already is 1,200. That's before we even look at their deductions. So for this example, they're pretty much going to be eligible for SNAP, right? It's pretty likely they're under the net income limit already before we even look at their expenses. So in this case, I could tell them it does seem like you would likely be eligible, and then I would offer assistance to help them apply. Now, for the sake of this example, though, let's just look at what their net income comes down to. So basically, what you take is that $1,200 and you just chip away at it by subtracting all of the eligible deductions. Since they're not working, neither of them are working, right? They're retired. They're not going to get that earned income deduction of 20%, but they will get a standard deduction. So the standard deduction is subtracted from their income. They both have medical expenses, right? So they had $335 a month. So we're going to take 335 minus 35, which is 300. So they get $300 deducted. And then we're going to determine if they qualify for the excess shelter deduction. So how do we do that? We have to figure out what their shelter costs are, right? So 500 for the mortgage. They're going to take that standard utility allowance. So their shelter costs are 954. And if they qualified for the excess shelter deduction, it would mean that their shelter costs exceed 50% or more of their adjusted income. Whoops, which it does. We took their adjusted income, which was 348, and we subtract that from their shelter costs, which is $606. That is the excess shelter deduction they're going to qualify for. So again, that can be pretty complicated. I don't recommend writing it all out. I recommend using one of those online calculators. But determining all their deductions together, you add those up and minus or subtract those from their gross, and it leaves John and Larry with a net income of $90. So they are well below the net income limit for a household of two. They will likely be eligible for SNAP. Moving along real quick, let's look at another example. This is Kara and Jessica, who are roommates and buy and prepare their meals separately. They are both employed. Kara receives about $2,000 a month in income, and Jessica makes $1,400 a month. They split their utilities and rent. Rent is $1,500 a month, and their utility bills come to about $150 a month. So the first thing I notice is that Kara and Jessica are going to be on separate applications because they, even though they're roommates and they live together, they buy and prepare their meals separately. So when determining Kara and Jessica's deductions and income, right, we are only looking at them as individuals because they are not going to be applying together, which is what's said here. So Kara's income is $2,000 a month. And remember, they're not seniors, they're not disabled, so let's just look to see if Kara qualifies because she is subject to the gross income limit. So for a household of one, right, she's applying on her own because she's not eligible to apply with the other person in her household because she's buying or preparing meals separately. So it's just for herself. She has to pass the gross income test, which is $1,696. Her income is $2,000 a month. She is not likely going to be eligible for SNAP. I don't think I changed this number here, so just ignore that, but it should be 1,696. That's an old number from last year's income. But either way, she does not qualify. She is over the 1,692, so she will not be eligible for SNAP. It doesn't matter what her net income comes out to being. It doesn't matter what her expenses are. because the way that it works for SNAP is that she has to pass the gross income test first, which she does not. So for Kara, I might offer her food assistance that she can get for free that's not tied to income limits through a food pantry. Best way to refer people to food pantries in their area is to use our Find Food tool on our website, where Kara can search by her zip code to find a food pantry in her area. Jessica, her income is 1,400 a month. So let's go back to the income chart. 1,696. Jessica's under that. So she passes the gross test. Does she pass the net test? Let's check. So we take her 14,000 and we take all those deductions. I'm not going to go through all of them again, but she'll get the earned income deduction because she does work, and then all the other deductions are looked at. And once all the deductions are added up, her net income equals out to $204. So she definitely qualifies, right? Because let's go back to the income chart. The net test is 1,305 and hers is 204 at this point. So she does qualify for SNAP, and we would help her at this point with filling out an application. So those are just some two, examples of what a household could look like, but everybody's situation is different. So it's really important to make sure that you understand the eligibility criteria. It is a lot of numbers, it's a lot to remember, but there are, like I mentioned already, handy dandy online calculators, which I don't think I have linked. But if you are interested in those, I can send them to you, the links to them. I have them bookmarked and I use them quite often. And they are great for helping me look at all the calculations and math that goes into it. So I can definitely share those with you if you're interested. So that concludes the step one, or I guess class one, learning one of SNAP 101 basics. What are the eligibility criteria? So hopefully you learned a little bit about SNAP today. And if you're interested in diving deeper to learn about the special categories where we dive into immigrant eligibility, student eligibility, work requirements for certain households, then that is going to be a separate training, which I have recorded. So if you're interested in that, let me know. And then if you want to bypass all of that and just learn how to actually fill out an application, how to actually help someone go through it all, I have a separate training recorded for that. So I appreciate your time today, and I hope you have a great rest of your day.